Hi folks, Lee Gettess here with the Market Sense, and welcome to October. We're looking at charts that come from the Trade Navigator software, the first of which was a weekly bond market chart. And after a couple of strong weeks, bonds have backed off a little bit this week, and it's a little surprising because there was a rather violent reaction in stocks to the lack of progress from the debt talks in Washington. And the bond market's kind of been rather quiet about it. We've got resistance up here 134 and above. There's kind of an area there between 134 and 134.10 that should be resistance. They have not been up there. And they've backed off a bit, but the support is actually down around 132.04, this upper moving average here, and they haven't gotten down to that either. They could drop back down here. Heck, they could drop all the way back to the lower moving average is 129.28. They could drop back down there and bounce back up, and that wouldn't look bad. That would just look like a normal market that's trying to move a little higher here. But at the same token, these highs are still below these old highs back here, so this could be considered just one big long sideways pattern. I don't know, I kind of thought they'd at least get to this mid-Keltner channel, if not higher, and I'm a little disappointed that they haven't been there, especially when they kind of got some news that could have drove them there. So we'll just have to watch and see what develops for the rest of the week. We do not know for sure if we're going to have employment data this week. It's scheduled for this week, but with the government shutdown, it's not 100% certain it'll come out or not. So, pretty uncertain week here. In stocks, you can see where the opening Sunday night was much lower on reaction to no progress in Washington, but they've kind of been able to shrug it off from that point. That lower moving average is around the 1670 area, and they broke through that a little bit, but basically they've held it and came back up here to the 1690 area, which is this moving average. Now, I think a move back to 1705 is very possible, and I think new highs are still rather likely, maybe not this week, but rather soon perhaps. What we have is, if you can see almost the whole year here, well, you can see all of 2013, you can look back almost a year, and in this time period, the biggest move down is back here, sort of in the middle of the chart, that was 127 points from high to low. Well, until we back down more than that from any new high, there's nothing to indicate really that the trend has changed. So right now that would mean a move back below 1600, and you can see we're not even close to that. So at this point, as long as they're holding support and trying to go up, you kind of got to expect new highs eventually. Again, not necessarily this week. 1705 is the resistance we have this week. So that's what we've got for you today. Hope you can find something profitable to get yourself into and avoid all that nonsense in Washington. Thanks for checking in to see how we're looking at things.